My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to save you a little money. My job is not just to entertain, but to explain. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. When the S&P 500 goes up for 6 straight weeks, something incredible can happen. The market can actually go back down a bit. Sell. That's right. It can sell off. Pretty shocking, I know. Well, today I heard endless chatter about the death of the bull market because of the overwhelming selling from the get-go. Hey, after all, the yield on the 10-year Treasury has soared over the past month, shooting up to 4.24%, including a big move today. No wonder the averages got hammered. Dow shedding 410 points. Oh, no. S&P plunging 0.92%. NASDAQ plummeting 1.60. Believe it or not, that's much better than where the market was at the lows of the day. Even worse, the stocks that led the decline of the market's old leaders, Apple, Nvidia, McDonald's, Meta, ARM Holdings. So many names with big gains. I don't know what to say. I have to default to that stock seer Jim Morrison the Doors. This is the end. My only friend, the end. The end of our elaborate plans. The end of everything that stands. The end. All right, look, I used to write obituaries for a living. I know what the end actually looks like. Oops, cart before the horse. I forgot to say, markets in turmoil. Can't have an end before a Titanic sell-off, right? Titanic being the operative term. All right, enough of the bogus exaggeration, needless hyperbole. I want to put this off in a little perspective. First, when you get many up days, to say nothing of many up weeks, the market's prone to pullbacks, often indiscriminate pullbacks, like some that we saw today. Now, you know I'm an inveterate gardener. I know that we need sun, lots of sun for the tomatoes to come up. Cherries, plums, beefsteaks, you name it. I like the sauce with the plums. But you know what's really a killer? No rain. If we don't get rain, we might as well be trying to grow tomatoes in the Sahara or even Death Valley. A sell-off is like rain. It's both a necessity and an inevitability. Yet what happens when it rains? We all just act like cats. We get scared. We're afraid to go outside. Scaredy cats. Well, newsflash, you and I are not cats. I know exactly what the rain does to cats that make them so skittish, and I used to have 6 of them. However, this kind of rain like pullback, it gives the bears all the ammunition they need to scare you out of the market with horror stories of October's past. The Great Crash of 29, Black Money in 87, the nightmare of the financial crisis in 2008. The only thing that surprised me today is that no commentator invoked any of these dates when they were trying to scare the heck out of us. Hey, there's always tomorrow. And why not? I mean, isn't the bond market terrifying? I mean, 4.2% on the 10-year? That has to be a bolt gun to the head of the bull, right? And when you remember that October tends to be a terrible month for the market, maybe October 24th or 25th will be more horror stories as befitting the newfound turmoil. On the eve of Halloween, though, let me give you a little Casper the Friendly Ghost narrative that will set things right, outline the opportunities, take us out of the twilight zone. First of all, the stuff about the 10-year going to 4.2% that many of the young people talk about every minute, that's really scary stuff, right? This time, like Scooby-Doo and Zombie Island, this time the monsters are for real. Look, I started this business more than 40 years ago, right down the block from here at Goldman Sachs, in a building that's now turned into 3-bedroom condos with a rooftop pool. I might have to buy a couple units. Not long before I got to Goldman, the 10-year Treasury rate shot up to 15%, December of 81. Dow Jones average stood at 1,072. The yield on the 10-year stayed above this current dreaded frightening rate of 4.2% until July of 2002, for heaven's sake. In the interim, what happened? The Dow Jones Industrial Average went to 9,000. That's right, Dow 1,000 to Dow 9,000 during a period where the 10-year Treasury rates never fell to 4.2%. It was always above that, mostly well above that. And we were in an incredible bull market almost the entire time, save for October of 87. Now, I hope that gives you some perspective of the bond market versus the bull market. The great bull market of the 90s happened with substantially higher rates than we have right now. In absolute terms, 4.2%, geez, that's low rates. Nothing. Second, stocks have made so many parabolic moves of late that I'm actually glad they're coming down. I was actually getting tired of saying you need to wait for a pullback every time someone called in about something good during the lightning round. Now that we're getting the pullback, should I tell you to stay indoors? And I wonder, still I wonder, who can stop the rain? For heaven's sake, can we just admit that it's about time we had a reprieve from all this buying? I mean, we had a reprieve, by the way, in Tesla, and then it put a good quarter, it goes up. See, stocks can't forever go up in a straight line. Apple was at 165 in April, ran to 236, 165 to 236 on Monday. It was due for a pullback, especially since we heard about tepid numbers for the iPhone 16, which launched a month ago. Are the slow iPhone 16 at this point still revelatory? NVIDIA stood at $43 a year ago. Yesterday it was at $143. Doesn't even NVIDIA deserve a rest? Wasn't it due for a pullback? Remember, from mid-July through early August, NVIDIA fell from 134 to 98. Then it shot back up to 130 before plunging to 102 by early September. Remember, that was the fabled double top. That didn't work. Both times I read the obituaries on NVIDIA with viewings and wakes galore. They read certifiably deadly. Must have been prepared before, you know, like those tremendous New York Times obits. Everything but the funeral parlor was listed. Oh, yes, and the time and date. Yet, even after today's $4 beatdown, NVIDIA is still at 139 change, higher than its July peak. Has something gone wrong here? Of course not. Do you know something? The greatest stock of this generation is simply taking a periodic break, like we've seen many times before. Do you know that even the greatest horse of all time, Secretariat, lost to Onion in the Whitney and Prove Out in the Willard? I don't even know where those horses. I don't know any of those losers. Who were those horses? Some stocks have been so strong that it takes a true horror like an E. coli outbreak to stop the run. And that's what happened to McDonald's, which has been straight up since it unveiled the $5 burger, running from $2.45 this summer to $3.17 2 days ago. Today, the Golden Arches got crushed, down almost $25 at one point, and on an E. coli outbreak center on the quarter pounder. 49 people sick, 1 fatality, 10 states. Might have been the Onions. Yet even then, McDonald's managed to rebound off its low, finishing down just $16 or 5%. Or how about Starbucks? The horror, which announced an even worse loss than we expected. Something that may be the benchmark of bad news from this 6-week stampede. Oh, yeah, the stock got crushed last night, initially this morning, falling all the way from 96 to 93. Yet even then, the stock bounced back and finished the day in the black. That's right, it finished up. Look, you get what I'm trying to say, don't you? When I was a cub reporter at the now-deceased L.A. Herald-Examiner, it was my job to scare you, to scare people, to scare readers. We had real bad circulation numbers at the Her-X afternoon paper, not a lot of those still around, competing with the all-powerful Los Angeles Times. My marching orders frighten people out of their wits, so panic, become indispensably scary. That's what I was told to do. Make sure the readers know how dangerous the world really was and sell subscriptions. Always being mindful that people don't buy subscriptions if the news is constructive. Back then I played for dinner. So I couldn't stem the tide of destruction and death that appeared under my byline 2 and even 3 times a day. Now, though, I have a different agenda. My agenda is nothing other than to try to help you make money. Being constructive. Being opportunistic. That's my M.O. Because the market's been pretty darn fabulous since I got in. Nothing really has changed. So let me give you the honest-to-goodness bottom line here. It's going to rain a bit. All those stocks where I told you to wait for the sell-off, well, here it is. Nobody knows how long the sale will last, so don't miss it. Things might be back to full price in a few days, maybe a week or even 2. Oh, unless you're a cat. Then I would advise you, stay indoors. Let's go to Joel in Florida. Joel.
Hey, how's it going?
Not bad, Joel. How about you?
Good. I just want to introduce myself before I ask a question. My name is Joel Leon. I work as an IT technician. I'm always looking at stocks and kind of learning how it works and everything. I figured I'd talk to a pro. My business is Revelation Technologies, RevTech, and I've been looking into Intel. What do you make of that?
Okay, I actually, for the longest time, would have told you to please don't look. But the stock has come down enough that I have to tell you, Joel, I am not going to fight the tide anymore. I got people out about 40 points ago, 30 points ago. I'm done. I think it's not a great stock. Either are better, but I'm not going to tell you to sell it. All right, listen to me, everybody. Don't get scared out of buying stocks at lower prices. We've been waiting for the sell-off. Maybe you should even take advantage of it. It's been a tough year for Etsy stock, and I'm seeing if investors might be getting a better opportunity for the next quarter. When I sit down with the CEO from the company's very cool holiday pop-up store in New York City. Then Mattel reported after the bell, and I'm seeing how the toy company is positioning itself for the end of the year in my post-earnings exclusive with the company's top brass. And in the face of a sell-off, it's a good reminder to make sure you have a diversified portfolio that can handle whatever this market throws at it. And that's why we're playing Am I Diversified, to see if the portfolios of Cramerica pass the test. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.